Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, August 23rd, 2019. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We've just recently seen selling pressure come into the market here on comments out of China that they will be increasing tariffs on the U.S. products here as retaliation, and that sent the markets tumbling a bit. And also, we are awaiting Fed Chair Powell's comments at 9 a.m. Central. So in just about 90 minutes or so, we will have Fed Chair Powell's comments, and that is what the market has been waiting for throughout the week. You can notice here how the market has gone virtually flat and sideways throughout the week. It has developed a very narrow 4, 5, 3-day range. You know, any one of those has developed a narrow range here on those periodicities. I've left it on the 4-day range down here, so you can see that it was very compressed here. We've had two back-to-back compressions here from this 4-day range to this 4-day range, and again, that's very compressed, right? Overall, the expectation is for a move of 120 to 135 points of movement once we do see expansion. So say we were to break to the downside here using this high at 29.40, that would give us a target of 28.05 on the downside. If we were to rally to the upside from the current lows here, that would give us a target near the 30.50 level, which is right near the top up here. 30.40 is the top of this recent key range there. So again, we have very clear targets, measured targets on both sides of the range. Again, we have a very compressed range here, and after this type of compression, you tend to see major expansion. The last time we had compression of this nature was here before we saw a big rip, and that was ahead of the FOMC meeting here and the Fed basically dropping the rates there on July 31st. So again, this is another Fed-based deal here where we're going to be compressed, and we'll see which way we go. We could go either way, but as I've mentioned before, 29.50 to 29.60 remains a major area of resistance, and the expectation is we likely return back toward 28.20 at the very least, and we could even see lower prices from there. So again, we'll see which way we go out of this range fairly soon. If we take a look here at the NQ, very similar price action, compression on a 4 and 5-day range basis, 3, 4, and 5-day ranges. You can see here currently at 41% of normal. If we were to break out of this range, we could have a move of about 380 to 430 points of movement here fairly easily. So again, if we use this high and rotate lower about 400 points from 7,800, that takes us down to 7,400, and that's the recent support I've been talking about. Above that level would open it up a bit higher just through, or actually from this low here, about call it 7,600, would open up to about 8,000 to 8,050. So again, we have very measured moves on both sides of the range. We've talked about 7,800 to 7,850 being major resistance right now, and if price can't get through that zone, we perhaps have to rotate lower. So again, 7,400 could be an easy downside target if prices are not able to break to the upside. So again, we will see which way we go from this range, and it could be significant expansion on a 1 to 5-day basis at the very least. Let's take a look now at crude oil. Crude oil selling off again on that news. Heading into the news of the China tariffs here, price of crude oil was very, very compressed in overnight trading, basically trading, you know, between 55.15 and 55.60. 55.15 would be about right here. So this was basically the overnight range was about right there throughout the overnight, and when the China tariff news came out, it just completely sold off, dropping down to a low of 53.40 now. And again, that 54 level has been significant support, and a failure to hold that level opens up quite a bit more selling pressure into 50.5. Right now we have this upper trend line that has continued to be in play. We've talked about the 57 being significant resistance here, and that rejection at that area played right into that narrative. We talked about the midpoint retest here yesterday, especially in the trading room here, and so far it's been a complete sell-off from those levels. So again, 54 is going to be very important here, but this thing is showing weakness, and a failure to hold 54 by the end of the day would suggest that we could be looking at a retest back toward recent lows at 50 half. Lastly, taking a look at gold futures. This one has been bullish for the most part, right? Trending higher, still stacked and sloped in the PEMAs. Nice uptrending channel here. It has stayed flat ahead of Jackson Hole and ahead of Fed Chair Powell's comments here later on this morning. This is a significantly narrow range right now on a 4 and 5 day basis. Look how small that range is here. That's 36% of normal. We could be looking at a 50 handle rally pretty soon. That takes us to between 1565 to 1585 based off of our measurements here. So if we're using the recent support lows here, we could be looking at a move that takes us quite a bit higher. And at the moment, this thing is forecasting between 1555 and 1570, and that's just on a short-term basis or on a regular basis. But if we narrow that up to a 5-month outlook, it gives us about 1565 to 1585 very easily. So again, we could be looking at a very, very clear bounce that takes us to just shy of 1600 on the next move. So again, still holding that PEMA trigger zone, still in the uptrend. It's got a bunch of compression now. We could be looking at a big time bounce out of that range. And again, even if we were to pull back, that 1460 remains significant support and could still be a buying opportunity if tested. All right, that's it for now. Please be sure to like, share, and subscribe. I'll see you in the trading room, and have a fantastic weekend. Take care.